Hello to all traders and welcome back to another market review brought to you by Orbex. We're focusing on gold and the dollar ahead of the replanned NFP that was supposed to take place last week, but due to the government shutdown, it's apparently going to happen tomorrow if there's no other hiccups or bumps in the road, let's say. But the NFP jobs data isn't expected to be so vibrant, only 40 to 70,000 new jobs to be added. So it's not like a couple of years ago where we were getting 200,000 plus jobs being added on a monthly basis. It's very low, a little bit subdued. And with the last government shutdown before the end of the year taking so long to reopen, it's really hampered the efforts of the American economy to get back on track. We're just looking at gold and the dollar then, like I said, and gold, what we're just seeing now is a little bit of a resistance at the 50-80 area, failing to get above 5100, which is what a lot of traders were hoping for after clearing 5,000 quite significantly, but that's just kind of sloping down now. If we just stretch this out so it's a little bit easier to see, as you can see here, we're predicting that if we do get a break above this, well, firm double top, this resistance area now, then we could be heading towards 5230 approximately, but 5100 would be the next psychological step before a move higher. On the downside, naturally we've got this not double bottom, but this bottom here out, a little bit of a false spike to the downside, so 4800 is approximately what we're eyeing for a potential move to the downside here if prices do continue to slide. Obviously gold traders now are just waiting for the next signal. We've had Fed interest rate decisions, we've got CPI data coming up, we've also got NFP data coming up as well, so it could have a little bit of a rocky road for gold and the dollar depending on the results. But with a new Fed chair expected to be appointed this year as well, is that going to shake up the Federal Reserve's path forward, or are we going to see more of a pullback on the dollar as well? So technically, as I said, 50.80 is looking like this next big resistance. If we do get a slide lower, we're having a couple little bit of bearish candles from the early opening session today, so we could have more of a continuous move or a bit of a choppy move downwards to approximately test 5,000. If we don't fall below that, then prices could, as I said, spring up to 50.80, but we'll wait and see if that does happen. But as you can see here, very choppy nature, developing a little bit more of a pattern now in the market. RSI is remaining neutral, not really giving us many signals, so we'll wait and see if that does happen in the near term. On the dollar index, again, a little bit of an incomplete road here. We had a bit of an upshift when buyers were attracting more buyers. We did prop above, well, tried to prop above 98, but that did get a firm rejection as well before we started moving lower, now trading below 97. But in the grand scheme of things, if we look on the daily chart, we're just seeing now that price action has recovered quite significantly. But as you can see from yesterday's trading, we had this massive bearish candle, which doesn't help things. But hopefully next time around, NFP data does. Retail sales later today, this could propel a little bit more optimism into the dollar, but we'll wait and see if that does happen in the near term as well. So just have a quick look back on gold on the daily chart, and as you can see here, we're just seeing now prices starting to get back on their feet, but not really potentially getting to these records that we saw, or this bullish momentum that we've seen for the last few months. So a little bit subdued, but still a long way to go, early in the year, and we'll see if anything does come out of it. So thank you very much for joining me today, and we'll speak again next time around. Bye for now.